What is up, everybody? It's Stas here. Welcome back to another video. So I've been getting so many questions. Stas, now that the market is finally pulling down, we're seeing a bit of red overall. What are some stocks that you're looking to buy for the long term? And I figured let me make a quick video, talk about 3 to 5 stocks that I'm going to be buying here this week, the next week. And at the same time, I want to show you guys how this portfolio, the M1 Finance portfolio, which I'm going to be buying some of these stocks in, how this has been doing over the past month. The last time I did an update video was literally 1 month ago on the 30th of December. So I want to update you guys. And if you guys don't know, this is a portfolio I started strictly for the YouTube channel. A little bit over, it's been, almost a year and a half at this point. I started this from $0 and now it's over $10,000. And you can go check out all of the episodes. I'll link the playlist down below. And again, there's a lot of episodes. We took this thing from $0 all the way to over 10,000 now. And if you guys enjoy the video, we might as well get into it. Hit the like button, subscribe to the channel. Make sure to get maybe $30 free from M1 Finance. If you guys do want to use this brokerage, you can get $30 free linked down below. And let's just get right into it. So at this point in time, on the 30th of January, the first month of this brand new 2021 year is officially almost over. This portfolio is sitting at $10,426, and in the past month, let's take a look at that first. We're down about $70, down about 0.7%, and a lot more red has come in the past week. In the past week, we're down about 3%, down $325, $325 being market gain. That's how much we've lost from the overall price of the stocks. But the beautiful thing is this portfolio has a good amount of dividend stocks, so I still have made about $2 this past week. I know it's not a lot, but I still made about $2 from earned dividends in the past week. And in the past month, let's take a look here, I've made about $20. Hey, so this portfolio is bringing in about $20-$30 on average per month at this point when it comes to dividends. And I'm not going to go over all of the holdings. I do that in pretty much every episode, but you can glance here and see I have DGRO, Amazon, ExxonMobil, which wasn't meant to be a top 5 holding, but it's actually grown from where I bought it. Now it's top 5, and that's the third biggest holding. Under that, we have ARK, ARKK. We have AbbVie under that. We have Starbucks, Johnson & Johnson, PepsiCo, MasterCard, Microsoft, Disney, Google. We have PayPal, McDonald's, VEA, Raytheon, Altria, Realty Income, Procter & Gamble, Duke, and AT&T. And you're seeing this, and you're probably like, Stas, where's your GameStop? Where's your AMC? Where are all your spec plays? They're not here. And in fact, I don't even own GameStop or AMC at this point. But this portfolio is actually all blue chip stocks for the most part. Companies that are very stable. They're not going anywhere. There's still some growth in most of these companies. And this is more of just a long term. It's not extremely risky. It's not ridiculously conservative either. This is just a long-term, invest every month type of portfolio. And in 10, 15 years, I'm going to look at it and be like, oh, wow. I could take some dividends off this, live off of this. Maybe I could buy a nice house with this in 5, 10, 15 years. As it grows, I could use it as a down payment. Who knows what's going to happen. But at this point, I'm just investing in this. And that's the thing about long-term stuff, guys. You have to just be diligent, consistent, and you just have to put money aside, whether it's $100 a month, $300 a month, $500 a month, whatever you can afford. You just got to put it aside and invest it. And when it comes to the top stocks that I'm buying right now, the truth is they're not the flashiest stocks. They're not the, oh my God, you're going to make so much money next year type of stocks, like all of these SPACs, all of these EVs that we're seeing these days. That's not it. That's not the case for what I'm buying when it comes to this portfolio, and that is for this portfolio. I have other trading accounts where I'm a bit more speculative, but for this one, again, this is more of a long-term, not too risky, not ridiculously conservative, but it's more of a quote-unquote safe portfolio. What I'm doing here is the first stock I'm buying, and I've been buying this for the past month, 2 months at this point, is ExxonMobil. Ticker symbol XOM. And at this point in time, I don't have my ThinkOrSwim platform open, but at this point in time, this is going up a lot because of oil, right? We're seeing crude oil. I think it's like 50 a barrel at this point, and I believe crude oil is going a lot higher. We've seen Saudi Arabia, they're cutting production. We're seeing a massive amount of demand slowly coming back. It's slowly but surely coming back, guys, in terms of traveling. All these businesses that rely on oil, that's slowly coming back. And that's why we're seeing this big spike in oil, and thus the price of these energy companies, they've also been going up. And you guys can see here, if you can see that, my average cost on XOM is $43. So I was buying some at 40. I bought some at like 46, 45, 42, and that's where I'm sitting at right now. I have about 14 shares in this account. And the great thing about it is I think it's a good turnaround play. Again, as we're opening up the economy, traveling gets back to normal, all that stuff. And on top of that, it pays a very juicy dividend, 7.2%. And from what I've been reading, this dividend is fairly safe at this point in time. And another risk right now, it's come about here in the past couple of days about ExxonMobil is this lawsuit right here. If we click it, you guys can see, according to the complaint, the company made false and misleading statements to the market. Exxon forced employees to use completely unrealistic assumptions about timelines for the company's well drilling activities in the Permian Basin. These unrealistic assumptions artificially inflated the company's operations in the area. Based on these facts, the company's public statements were false and materially misleading throughout the class period. And when the markets learned the truth about Exxon, investors suffered damages. So that could be a reason why these past couple of days Exxon has been going down. So approach with caution, guys. Understand this. Yes, oil's doing well, dividends solid, but understand what is going on here with this class action lawsuit. You must be careful. And as always, don't just buy any stocks because I say I'm buying them. You must do your own research, and you must always do your own due diligence. So stock number 2 that I'm going to be buying more of this week, the next week, and I've already been buying it recently, is Pepsi, ticker symbol PEP, and this needs no introduction. I own about $500 worth here. I own about 4 shares at an average price of $135. It's right around where it's trading. That's right around where it's trading right now, $135, $136. And again, they don't need an introduction. They have Pepsi. They have so many snacks on top of that, which I can't even name. There's so many of them, but I guarantee you, if you were to go downstairs or upstairs or wherever the heck your kitchen is, wherever it is in your house, if you were to go there and look, you're probably going to have at least one Pepsi product. Maybe, probably, right? And that is why I like it more than Coca-Cola. Coca-Cola has great beverages, juices, water, all that great stuff. But we see, again, Pepsi, they have that stuff as well, beverages, all that, but they have snacks too, chips, whatever. They have so many snacks, and I think they're more diversified in terms of that, in terms of products compared to Coca-Cola, and that is why I own Pepsi instead of Coca-Cola, and I'm going to continue buying this, and they have a 2.9% dividend. The PE ratio is a bit lofty at 27, not going to lie. This is not a basement value, bargain basement value. It's not. If it somehow got to maybe like a 12, 15 PE, that would be great for, the value people out there. I'd for sure be buying a ton of stock at that price, but it's not. It's not there. It's at 27. So you have to be careful. It is a bit lofty, but if you're looking 5-10 years out for a nice blue chip stock, I'm buying Pepsi here, and I don't have a problem, too big of a problem with that valuation, as long as you're just, averaging in over time. Over time, you're going to be buying at prices where the valuation valuation's a bit too high, and other times you're going to be buying where it's undervalued. And that's why over time it smooths out, right? You guys know what I mean. So that's stock number 2. Stock number 3 is going to be Raytheon Technologies. This is an industrial, a defense play. And this is really for a dividend play, honestly. And in this portfolio, I don't really own many defense stocks, industrial stocks at all, pretty much, right? I have utilities, I have consumer defense, I have some tech, I have tech in Amazon, Starbucks is kind of a tech play in its own way. I have, Disney, Microsoft, PayPal, stuff like that. But I didn't have anything defense. I didn't have anything industrials, aerospace, things like that. So I wanted to add some RTX. I did that in the last update video. If you guys remember, that was last month. I actually sold out of Facebook. I was 2 in, and I'm not even sure if I mentioned that here in the M1 Finance playlist videos yet. I mentioned it in my daily updates, and if you guys don't watch those, you got to. You must subscribe and check out the daily updates. But I mentioned that, and I'll just say it again right now, I actually sold out of Facebook in this portfolio. I was too heavy in the big tech. I had, Google shares, Amazon, I had Facebook at the time, and Microsoft. So I figured, let me just divest a little bit from the big tech names and add a little bit into a company, an industry that I didn't have any exposure to, at least in this portfolio. And that's exactly what I did. I sold out of Facebook, added some into Raytheon, and I'm going to continue adding to it. As you guys can see here, it's about a 4.2% weighting of my portfolio right now. The goal is 5%, so I'm going to beef it up a bit to 5%, and over time, I'm going to continue adding to it. So those are the top 3 stocks that I'm buying right now for sure. And if I were to do 2 honorable mentions, I'd probably pick, I kind of want to say Microsoft, although Microsoft is a bit frothy as well. 34 PE ratio, and this past week they reported earnings, solid earnings, and the stock hit an all-time high. But now as the market's pulling down a bit, I believe Microsoft hit 245. Now it's at 230. If it's able to get down at 210, 205, 220 even, I might just nibble a little bit more, add some more. And you guys can see here, my average cost is in the 180s, so I'm up a pretty good amount on this position. So I'd like to see it come down a little bit more before I add to it, more to it, and that's Microsoft. And another one for the 5th stock, I don't know, guys. I'm thinking maybe some Altria, MO. This is another dividend play. It's a tobacco company. They pay 8% right now, so I'd like to add some into that. It's right around my average share price right now. I own 10 shares at $41, so I'd probably buy some Altria there for the dividend, for that nice cash flow. That's probably my best dividend stock that I own here. Altria at 8%. That's pretty crazy. And if I were to do another one, I'd probably pick either Starbucks or MasterCard, right? Starbucks or MasterCard. Starbucks actually dropped this past week to about $95, although my average share is $75. We're a pretty good amount above my average cost here. I'd probably add some shares if it were to drop a little bit, maybe to $88, $85, even $90. I might add some there. So those are the main stocks that, I'm looking to buy right now. And the other ones you guys see here, I'm not looking to sell them. I'm just holding on. And who knows, if the market tanks 20%, 30%, I'm probably going to add more into Amazon for sure. I'll probably add into some ARKK, this growth ETF, because you guys have to realize, if the market in total goes down, let's say the S&P goes down 30%, there's going to be some stocks that go down 70%, and some stocks within the S&P 500 that go down maybe 20%. So you have to realize a growth name like ARKK, which has a bunch of growth stocks in the ETF, you have to realize something like that. If the S&P goes down 30%, ARKK, this could go down 30 or not 30%, 50%, 60%. You have to be aware of that. And if that were to happen, I'd probably double down on my ARK. And that's pretty much it. I mean, that's what one of my long-term portfolios in the stock market is looking like right now. Let me know your thoughts down below in the comments. I would love to know. And if you guys enjoyed the video, hit the like button. Maybe subscribe to the channel. And if you guys want to use M1 Finance, this awesome brokerage you see right here, I love it. I've been on it for over a year and a half at this point, right around a year and a half. Check out that link down below. If you sign up, they bumped up their offer from $10 to $30. If you sign up and deposit any amount of money, you get 30 free bucks. I also get 30 free bucks, and we could invest in some of these companies. So go check out that link down below. I'll catch you all in the next video. Thanks for watching as always. Be safe out there, guys. I'll catch you all in the next video. Peace out.